Paul, great to have you back. Before we get to small caps in Europe, let's just talk broadly about the fact that we got a bunch of inflation indicators on deck starting really tomorrow. And I wonder if those do come in cool, what's the potential upside for tech?
Yeah, so I think you have to look at tech in two time frames. Short term, I think there's a number of positive catalysts that could be working in favor, and you just touched on one of them. There isn't a day that goes by nowadays where there isn't an inflation indicator that's showing easing inflation pressures. We're coming into the PPI tomorrow, CPI next week, and then the Fed on Wednesday. Just looking at CPI over the last, the November report, which was released in December, that has come in weaker than expected more than any other month going back to 1998. So you have a seasonal bias in favor of a weaker CPI, plus the fact that we were just talking about all signs, all pricing pressures are easing. So that sets up the scenario where the Fed can talk a little bit more dovish next week or not be as hawkish and spook markets. So I think that could be a positive short-term setup. And that coupled with the fact that sentiment has gotten weak for the sector, you have it reaching short-term oversold levels on a breadth basis. And then also, as you were touched on in the intro, tech is off, the NASDAQ is off to its worst first week of December, going all the way back to 1975. The only 2 years that were worse were 1974 and 1975. So that's pretty bad. Two consolations. Those 2 years, those 2 Decembers, the NASDAQ finished up the remainder of the month after that negative down week. And what people forget about December overall, and the NASDAQ specifically, is that it's a back-end loaded month. Like the overall market, the first half of December, the NASDAQ has typically seen negative returns, and it's been up less than half the time. In the second half of December, it's been up an average of median of 2%, with gains 3/4 of the time. So I think in the short term, while there's looming issues, a longer term for tech, I think in the short term, you have some of these positive aspects. And before I forget, rates in the dollar. They've traded inputs to tech, and in the last few days, you've seen both the dollar weak and rates falling, and that should be a positive for tech.
For sure, below 105 on the DXY. But we talk about small caps and European tech. I mean, is mega cap tech really still have chains around the ankles at this point?
Well, so I mean, there's some issues here. You look at large cap tech. Right now, the good news is its valuation relative to the market has come in by about 25%. The bad news is that it's still valued at about a 28% premium to the S&P 500. Over the last 10 years, that premium has been 11% on average. And over the last just 5 years, the premium has been 20%. So there's still, even though valuations have come in at a faster pace than the broader market, they still haven't gotten back to that historical average. And if we are going to see this recessionary environment come through next year, as Frank was talking about, Mark Benioff's comments, there's macro headwinds. If that comes through, that's going to add further pressure to the tech sector in general. So I think large cap saw the biggest runs over the last. They haven't come in as much as European tech has, and small cap tech.
Might we be seeing